Hello viewer. Goodwill presents stock pick for month of August. We recommend buying NAHAR Polyfilms Limited for a time period of 6 months for a target of 425 rupees. So, starting with introductory part, the company belongs to 7-decade-old NAHAR Group, which has a diversified presence across various businesses. Company has delivered good profit growth of 39% CAGR over last 5 years. NAHAR Polyfilms Limited, which was previously known as NAHAR Exports Limited, belongs to NAHAR Group of companies. The company was incorporated as a public limited company on the 11th of November 1988. Earlier, the company was engaged in the manufacture and exports of cotton, synthetic and blended yarns. In the year 2009, management decided to put up a biaxially oriented polypropylene films (BOPP) films project with an annual capacity of 30,000 ton at District Resan, near Bhopal, in the state of Madhya Pradesh. The BOPP films are mainly used in flexible packaging and sold in the domestic and international markets. Next, we shall analyze the strengths, weakness, opportunities and threats for the company using SWOT analysis. First, coming to strengths, there has been an increase in promoter holdings which signals the rising interest in the company and may indicate better times ahead for the business. Shares of promoter holding has been increased from 70.5% to 70.7% in the last quarter. Next, a low debt-to-equity ratio indicates lower risk, because debt holders have less claims on the company's assets. Further, the debt-to-equity ratio has been reduced from 20.24% in 2021 to 18.97% in the year 2022. The annual net profits have been improved from 817.72 crore to 977.11 crore in the last 2 years. Further, the change in the shareholdings percent of fee has been increased from 0.02 to 0.03%. Coming to the weakness, there has been a decline in the net profit margin in the year 2022 to 17.16%, indicating the company is making less money per rupees of sales. For the opportunity segment, company is good value based on its price to earnings ratio 8.69 times compared to the Indian chemicals industry average 12.78 times. Company earnings have grown significantly by 46.1% per year over the past 5 years. In addition, earnings growth over the past year 53% exceeds its 5-year average 46.1% per year. Last but not the least, for the threats, there is a need to be caution as the company shows increasing trend continuously from non-core business activities. Further, we will dig deeper into fundamental and technical analysis of NAHAR Polyfilms Limited. Starting with the fundamental analysis part, the company has a market capitalization of 907.2 crore rupees. Dividend yield provided by company is 1.08%. Face value of the company is 5 rupees and return on capital employed is 14.73%, which is very good sign. Further, if we talk about ratios, price to book value of the company is 1.02 times. Price to earnings ratio of the company is 8.7, which denotes the company is undervalued. Industry PE stands at 22.46, so this denotes the company is highly undervalued in comparison to its industry. Debt to equity ratio of the company is 0.27 times, which is considered ideal. Returns on equity ratio is 13.86%, which is highly encouraging for shareholders. Earnings per share is 35.66 rupees, which is quite good. Now, we will compare the annual returns of this stock with the benchmark Nifty 50. Indian stock market benchmark Nifty 50 has given a yearly return of 7.9% from August 2021 to August 2022. NAHAR Polyfilms has outperformed the benchmark index and has provided returns of 76.7% from August 2021 to August 2022. Let's take a look at some of the current scenarios, more in-depth technical aspects. In the time frame of 4 hours, the pivot R2 coincides with the support zone, which may be situated between 350 and 360 rupees. This range may also be considered a potential target. In addition, the immediate support zone is contained within this range. There was a significant volume moving in a bullish direction around the 18th of August 2022, which broke over the resistance zone and went into a support level. The current price levels in the 4-hour time period are being supported by a number of factors, one of which is the moving average of the past 50 days. Both the MACD and the RSI have pointed to an upward trend, and the RSI has recently emerged from the oversold zone to reach its current level of 54.81 on the one-day time frame with conventional settings. This indicates that the uptrend is continuing, with the potential for a 14% increase in the return, despite the fact that the target price is 425 and the stop-loss level is 320. The entry point has been established at 370 for this trade, with the potential for a 14% increase in the return. That's all. For any queries, we can be reached via mail address and contact number mentioned below. Thank you.